I'm Charlotte Christian, founder of Summit, a divorce and custody law firm. Today we have a financial planner with us, Norman Bryant. Thank you so much for being with us, Norman.
Great, I'm excited about being here.
Well, I want to talk a little bit about financial planning in divorce and why it's so important. Is the planning for divorce better before divorce, during, or after?
I think it's critical in all three of those phases, but ideally before financial decisions are made and the divorce is final, it's imperative to be done on the front end, because once those decisions are made, they're irreversible. So focusing on the planning piece, affects your taxes, the wishes for your estate, and affects every aspect of your life. And it is a very emotional process and time.
Definitely is.
But during the financial planning phase, it helps you focus and provides a strategic process for you to go through and keeps you on track so that you're not making emotional financial decisions, but sound financial decisions.
So the planning is what causes that?
No question. Starting up front and working with someone who understands that process can be significantly impactful.
When you're married and you go through your financial asset list and we're having to break those apart, all assets aren't created equal, right? They're not all equal.
Not even close. For example, you might be awarded your home for a $500,000 home versus the $500,000 401k. When distribution happens, obviously 401ks are tax deferred, but upon receipt of those funds, they become taxable to you. And so taking a house and comparing those two to a 401k, so they're not created equal, and putting that plan together in a projection and understanding what those dynamics look like over time will help you make sure that you make a fair and equitable decision on how those assets should be divided.
So if you sit down at the table, and it appears that if you got a $500,000 house and a $500,000 retirement, it appears that if you split those down the middle, that would be equal. But what you're saying is those are not equal.
They're not equal, especially as it relates to taxes. And again, with your filing and all the pieces that go into that formula, it can be a significantly different bottom line.
Absolutely. In retirement planning, is there a big risk if you don't plan correctly?
Absolutely. From a tax perspective, from estate planning perspectives, it can be tremendously impactful, but it also can affect your loved ones and your heirs, the ones who, that you are planning ultimately for. But as you go through that process, you have a financial reset, so to speak, and so you have a limited amount of time to start the process in terms of your time horizon. And then it also affects your risk tolerance. How aggressive do you want to be? How conservative are you as an investor? All of those things factor into your timeline, which can either shorten or lengthen the process.
That's really good advice, because a lot of people don't realize, even though you're getting a divorce, there's an immediate cash flow change after you split up.
When you look at that from a big perspective, at one point you might be sharing a checking account. Maybe you have your own individual checking account, but either way, you have two salaries in most cases that are going into those accounts. And then all of a sudden, that individual is gone, and then those funds are not there. And so you have to rethink the way you process your day and your expenses and the things that you have goals and desires in terms of what you want for your new lifestyle.
Norma, we see people come back to us who say, well, this happened during my divorce, or that happened and I didn't plan for tax planning and it ended up costing me six figures. Or, fortunately, when we work with somebody, we try to save them up to six figures in taxes. Do you see that often, people not planning and it costing them high amounts of money because they didn't plan?
Absolutely, and especially as it relates to dispersing of retirement accounts and who takes over. A QDRO, it stands for Qualified Domestic Relations Order, is what we do a lot of work with, especially with law firms and QDRO specialists, making sure that those documents are set up properly to make sure that the dollars that are awarded to the now ex-spouse are done properly, that they're done legally, and that they're done with no penalties and no taxes. And so it's vitally important to make sure that you're working with someone who is professional in that process and understands. Again, there are a number of factors that go into the planning process and the dissemination of assets. One in particular is a thing called a quadro for short, but stands for Qualified Domestic Relations Order. And it tells the plan administrator for the spouse that's in the plan where to direct the funds, how they're to be dispersed, and it keeps you from being in a tax penalty situation where you're paying ordinary taxes and then penalties prior to 59 and a half. And it's the only way qualified plans can be distributed. 401k, pensions, profit sharing plans fall into those what we call qualified plans, meaning pre-taxed. After-tax dollars can be done, with just the divorce decree.
So it's so important to avoid emotional decisions. Is that a correct statement?
Absolutely. Again, a plan creates clarity, and it takes the emotion out of the process, and we focus strictly on what does it look like from a what happens now perspective, medium term and long term planning, because again, your tax implications could change and will change over time, especially it relates to alimony, child support, the age of your children. And so having a plan in place really creates clarity around what it is that you're trying to accomplish.
Your long-term goals have to be completely rebuilt.
No question. Again, at some point, I see in a lot of marriages and working with couples, one individual seems to be the person that kind of handles that end of it. And then all of a sudden, the individual who doesn't handle it could be thrown into the process of going, what do I do now? And again, those emotional decisions are made sometimes thinking about what's in it for me today, not understanding what the implications can be for longer term, especially around how the asset is taxed and making sure that you're not putting yourself in a situation that you're going to regret later.
Thank you so much. I think the bottom line is that don't sit down at a mediator table or go to trial without having planned, because you've got to plan your future, and you've got to make sure that you go into it without emotional issues and without just not understanding what your next move is going to be. So planning is so crucial. Thank you so much for being with us.
Enjoyed the time.